The market isn't manipulated, but if you trade it long enough, it absolutely feels like it is. You get wicked out, price reverses right after, fake breakouts everywhere, and it feels like someone is targeting you. But here's the truth. No one is sitting there hunting your stops. What's actually happening is way more mechanical than that. And once you understand it, your trading completely changes. Think about how most traders experience the market. You enter a breakout, it fails. You short a breakdown, it reverses. You put your stop in a safe place, it gets hit. Then price goes your way. That's not random, but it's also not some guy in a big bank hitting a kill retail traders button. So what is it then? Markets are just auctions. That means buyers need sellers, sellers need buyers, and large orders need liquidity. So price has one job: move to where orders exist. Where do orders exist? Pretty obvious: above highs, below lows, at breakouts, at stop levels. So what does price naturally do? It moves into those areas because that's where transactions can happen. So when price spikes through your stop, it's not targeting you, it's just accessing liquidity. And that's where it starts to look like manipulation. Because from your perspective, it breaks, you enter, it reverses, you get stopped, and then it goes the original direction. That feels like a trap. But structurally, what just happened is liquidity got taken. Weak positions got cleared, and then price moved in the real direction. Let me show you exactly what I mean on a real trade.
This was ES Friday morning. We have a breakout out of overnight compression. That's expansion out of contraction. That's where most moves start. So I'm only thinking one thing: I want longs. Price pulls back into VWAP, sits around the opening range low. Now this is where most people are getting confused because it looks like you're going down and then comes up and going down again. So they wonder if it's going to continue going down. But let's look at the context. Okay. We have expansion out of contraction, compression in this area. It looks like a wedge, might not be perfect. Okay. But it pulls back into value. And then I go long here. Okay. I go along around 71.20 and I put my stop around 71, under 71.16, because that's the pivot low here. And once it breaks, there is no looking back. It doesn't hesitate. Runs all the way to 71.80. Okay, and above. Now here's the part most traders miss. That move only happens after liquidity gets cleared. If you entered too early, up here somewhere, you would be part of that liquidity. So again, it looks like manipulation, but it's really just liquidity being taken, positions getting cleared, then the price moving.
No one is hunting your stops. You're just trading in the wrong place. Once you understand that, you stop reacting to the market and you start positioning yourself where the move actually begins. I'm going to break down exactly how I identify these setups step by step in my next video. If you want the checklist I use for these trades, just comment checklist and I'll send it to you.